What's going on, everyone? Welcome back to this multi-time frame forecast. We're going to be going over gold, and before we actually get started, I want you guys to do one thing, and that's just like this video. As always, not only does it support us, but it gives others the opportunity to really learn how to read charts more effectively and potentially get some valid setups along the way and make some pips and some money. There's more than enough money out there for everyone. No need to be greedy. Do us and everyone else a favor. Like and comment down below. It really helps us out. That being said, we're going to go straight into gold. We're starting on the monthly time frame. If you don't remember why we marked it up like this, please try to go back and find it. We had talked about gold several months prior, talking about this particular setup specifically. But the great thing about this setup is we're actually coming to a point where it's actually being valid. So we're looking for validating this setup. It's really, really close. As you can see, what we had marked up right here. So just to give you a quick reminder, I'll write it up because I don't know where it went. This was structure on the monthly time frame. And if I remember correctly, this was the all-time high, previous all-time high. Yeah. So this was the previous all-time high close, monthly close. So put that line up here. Now remember, if we want to get information on the current leg, we need to go to the previous leg and so on and so forth. So we're going to do a little quick fib here. Oops, wrong way. So this lined up with the 38%, which was another thing that we had talked about. 38% of the monthly. Once again, this would be monthly. And we want to shoot for 38% minimums on our Fibonacci's, just because it has a little bit more, I guess, validity behind it, because it's one of the major fibs, the first major fibs. If we're just going off of any fib below that, I don't know, it's just too much of a risk that it can continue going in that direction. So we went to 38 as a minimum, and we're seeing that this 38 aligns with some significant structure, the previous all-time high. And the reason why we have put our stop loss here is because of the 61%. But based on this high stretch of momentum, I feel like we could be comfortable putting it here. However, if we put it below this 61, we're still getting good risk reward ratio. So I would recommend you are conservative. Keep your stop loss pretty long on this one, just because we could see a deeper retracement to the 61, but it's unlikely because this area of structure right here. However, on this chance that we can, you can be a little bit more conservative. And from there, we can go into the weekly. And we didn't really see anything too interesting on the weekly. However, we could be seeing a potential M pattern kind of forming. And I'll go about, oh shoot, I'll go through that in greater detail here soon. Nothing really. So potential M pattern right here, which just means it's going to jump up, but it's not too significant. So let's go back to the weekly. So this is what I'm talking about right here. Decipher pattern. B, C, D. And then we'll go drop down to a day real quick. So as you can see right here, we just have, with these particular patterns, a higher probability of jumping up to the neckline. But because we're so close to our entry point, I would just want to say that it's going to come down and try to test these levels. We're still in a bullish momentum right now. So remember, we've created a script that allows you to check the environment of the trade before we actually get involved. And you can see down here that we're still in a red, which is a bearish environment. So once we start making breaks for higher highs and higher lows, in addition to other metrics that are needed to be confirmed on our entry strategy, then we're going to start looking for buying opportunities. And that's just going to be on the daily and the 4-hour based on structure. So once this turns green, a dark green, which means that we're ready to go, then we're going to start looking for entries on the daily and 4 hour. But for now, we're still waiting. We're really close. It could be as early as this week or as late as next week, as um, as far as seeing a valid setup for this particular pair. So once again, this is gold. We are waiting. We had talked about this months prior. However, it is finally coming into fruition. So we are wanting to wait a little bit longer and see why, or see what can happen with this particular pair. So the reason why we had real quick put this extension up here is because we wanted to go base off of the weekly leg. I think it was this one, yeah. And there we go. Weekly leg. Sorry. We'll do 127 fib extension. The weekly leg. So remember, if you want to get information on the current leg, you need to go to the previous leg and vice versa. Or same thing goes for the new leg. If you want information on that, you need to take information on the current leg. But the problem with that is it's a little bit trickier because you're kind of predicting where the leg is going to start reversing and where it's actually going to end. So for this particular instance, because we're stopping at the 38, we just ended up using the leg that's being used for this leg right here. So X, A, B, and so forth. So that's usually how it goes. So we're using the X leg to get the B leg, whereas typically you'd be using the A leg to get the B leg, if that makes sense. So this is gold. Once again, we are just in a period of waiting. We do have upward momentum that was showing extremely bullish behaviors. As you can see right here, it's been tested several different times consistently, and we even had a little channel that was a bullish as well. So just a slight little channel. I don't know why it's very dim, but we had a little channel that was being bullish as well, and it was cooperating with our trend line. And yeah, so this is pretty much what we have right now. We're still waiting a little bit. I think it can make another push down, but if we can start seeing some change momentum right here, then we would be more than ready to execute this particular trade. So I just want to make it a little bit more pretty, so when we launch it, you guys know what we're looking at. And I'll just here, TP1. So we have three pieces of confluence, take profits, a potential M pattern formation on the weekly, daily, and we're just currently waiting for our entry conditions. So remember, with gold, it tends to move a lot. You can see these candles right here. So when it moves in a particular direction after a bounce, it really makes a move or a break. So keep that in mind when you're setting your stop losses and using proper risk on this particular pair, because gold and oil obviously acts a little bit different than others. So that being said, we are on the brinks of getting ready for a trade. Wait for your entry confirmations before entering the trade, obviously, and use proper risk. It's a new week, guys. Let's make some money. We're going to be going over some of the trades that we had talked about over the last couple of weeks and months that are currently in profit or have taken profit. So hopefully you have been following along, taking some of these trades as well, learning along the way, and then more importantly, making some money. I'll see you guys in the next video. Bye.